Well, despite home prices in a real downward trajectory these days, other factors are causing for uncertainty when it comes to making your mortgage decision. So, should mortgage seekers go fixed or variable? What do you do? Well, to help lay this out is mortgage agent Janine Jewell joining us. Janine, thanks for being here this morning because, despite the fact that the real estate market is, in a period of decline, it would seem, people are still making transactions, buying homes, remortgaging their homes in certain cases. As you know, this is your business.
Absolutely.
What is your sense of kind of where things appear to be going right now? Because there's kind of conflicting advice. Should we be locking in? Should we be going variable? What's the sort of advice you're giving to agents right now about where you kind of see things potentially going?
Absolutely, Nick. So, at this particular moment in time, we've seen a lot of influx. There's been a huge flux in the market in recent memory, but there is a lot to suggest with a recession probably impending. Yields would suggest that we're probably going to be in a situation where rates are going to be starting to come down, at least fixed rates in the foreseeable future. Everything would indicate that probably we're not going to see variable rate mortgage holders seeing any real relief until toward the end of this year, maybe into early next year. So we're making our decisions based on that. I think a lot of mortgage holders and a lot of the clients that I've been working with have been leaning a little bit more toward like a shorter term fixed rate right now. So a 2-3-year term, just to provide a little bit of stability so that they're feeling like they're getting, just knowledge of what their payment is going to look like in this next season.
Why is it, if people don't perhaps understand, that fixed rates may move but variable likely won't? Why is that?
That's a great question. So they're actually related to two different things. So the Bank of Canada ultimately dictates what variable rate mortgages will ultimately look like. They're who are responsible for the overnight lending rate. The overnight lending rate is what is related to the prime rate that the big banks have, and then there's sometimes a discount or a premium that's associated with variable rate mortgages. Fixed rate mortgages, on the flip side, are actually related to bond yields. And so we've seen a couple of indicators. So 2- and 10-year bond yields have actually sort of inverted, which is a really good economic indicator in history. We can see that they have, suggested the recession is coming, and we've seen that recently. So they'll hopefully in the near future start to come down for
No
us.
one obviously wants to talk about a recession or sort of talk it up necessarily, but so many people do hold mortgages, and people, if your mortgage is coming up right now, you have decisions to make here. Yes. So you were saying really what you look at with your clients is kind of right now like 2 and 3 years out. Is that sort of the seeming sort of strategy?
So I would say every client is going to be different. I think it's really critical to have an in-depth conversation around goals, around priorities when you're having, when you're making a decision around that mortgage. So whether that's purchasing a new home or refinancing or looking at the different options available if you're struggling to make your payment. But yes, as a whole, I do think right now probably having a little bit of stability. And again, every client's going to be different. Talk to a mortgage professional. Yeah. That's what we're here for. But at the end of the day, the hope is that if you can have a little bit of stability in this season, it's going to create, a better family life for most people.
And if you're shopping for a home or shopping around for a mortgage, what's the advice there in terms of how many people should you speak to in terms of mortgage agents, et cetera, sort of to try to figure out, am I getting the best deal for my dollar?
That's a great question. So a good mortgage broker or agent should shop the market for you.
Okay.
They should be working on your behalf. Most people aren't aware, or sometimes I find people aren't aware, it doesn't typically cost anything to work with a mortgage broker or agent. So we actually have the option to shop the market for a particular borrower. We get to look at lenders across the industry. I work with over 60 lenders, for example, all of the major banks. So it is, hopefully, if you're working with someone who's good and knowledgeable and knows what they're doing, they should be able to do that shopping for you and take it and make it as seamless and stress-free a process as possible.
All right, well, it's good to get inside your head, Janine, this morning and sort of find out a bit more about this. Thanks for joining us, Janine Jewell, mortgage agent. Appreciate the time.